MPW. This ticker just threw an atomic bomb on the whole situation. If you don't know, Medical Properties Trust is a real estate investment trust, and they went down 30% today. And I'm a bag holder. Okay, so from a perspective of a bag holder, I'm going to tell you what happened. I'll go through the news a little bit, do some makeshift numbers. Okay, not makeshift, but back of the envelope numbers to try to figure out what's going on with the company, where the next quarter is expected to be, or at least that I'm expecting to be. Some holes in the balance sheet that I've been noticing. I've been looking at their 10Qs quite a lot and trying to study it. And I probably will give you an expectation, a feel for like what's actually going on with the company. I'll try to go in depth as I can. The previous video I went pretty in depth, but I'm going to mention some things I didn't in the last time around. So if you want to watch that one first, that's fine. I made it after the last quarter, but before this new press release that happened today. So a 30% down day, in fact, almost to the dot, sitting at $3.54 after hours, coming down from pretty far, north. I think we were north of $5 basically before this all began. So what happened? Well, here's the press release. You can find it on the website of Medical Properties Trust. Ticker again is MPW. The last price $3.55 here. So what you want to do is just basically go to investor relations, and then you can see the press release there. You can download it in a PDF if you want to read it. So the big news here is not so much the numbers which they're mentioning, but there are some quotes, like for example this one here: there can be no assurance. Well, that's not a reassuring quote. That Stewart will successfully execute its plans on the company will recover all of its deferred rent and loans outstanding to Stewart. So basically what they're saying is there's no chance in hell we're getting any money from Stewart anytime soon. Okay, there's mentions of numbers up here like 50 million of continued like unpaid rent, and adding it to another 50 million of deferred rent for the Norwood Hospital, and then extending another $60 million loan, which I'll talk about in a little bit. On top of all that, so not only is MPT not getting paid, but actually have negative revenue because they're dishing loans left and right to Stewart, trying to keep the company afloat to quote unquote protect the property values of MPT's portfolio. I'm just going to call it MPT, but the tinker's MPW. And so here's when they talk about this, the protect the value of MPT's assets. But really, I don't know what they're doing. They should just cut their losses and not give any additional loans, and then let Stewart bankrupt and just sit on empty buildings. I mean, I think that's just actually the best case scenario, because they're getting zero cash from Stewart. They're getting promises. Oh, we'll pay you like $9 million this quarter. We'll pay you more in the following quarters. But none of that's probably going to materialize. And where's that money coming out? It's coming out of the $60 million loan that MPT just gave Stewart. So anyways, they throw some numbers here. This is so funny because they know they're not going to get any money from Stewart. And so they throw this chart out to show investors what the numbers look like without Stewart. Like, why else would you throw this out? So here's the chart. Let me see if you can clearly see it. Oh, you can't see the numbers on the right. All right, hold on one sec. So it's just so ludicrous to me that they're doing this, right? So here it is, rent build, and this gives you a perspective of how big Stewart actually is as part of the overall revenue for MPT. 52 million versus everybody else, non-Stewart. It's how they labeled it, Stewart and non-Stewart, right? It's like basically, okay, this is what you're losing, guys, under Stewart, and this is what you're going to be getting. So non-Stewart is 177 from rent, and then other incomes, 229, etc. I'm sorry, no, this is total is 229, but with other incomes, 177 plus other incomes, 235. So that's based on last quarter's figures, though. This quarter is probably going to be a little bit different. Funnily enough, under here, they also say, okay, 4 million of that is basically non-cash deferred rent from Norwood Hospital. So that's -4, and then includes approximately 13 million of contractually owed rent and interest revenue from the non-cash receipt of investment in PHP Holdings. So basically, they're receiving stock from PHP. They're receiving PHP stock in lieu of payment, and they're registering it as revenue, which is, they mention it, but so anyways, in this paragraph here is just complete, like, okay, whatever. It's really not going to contribute too much. So, all right, moving on. 30% down day. This is 10Q, right? Let's do some math. We're gonna go under this agenda, and the situation in numbers is the following. We have $235 million worth of revenue, okay, based on last quarter. So it might be even less this quarter, okay? Minus $17 or $17 million of deferred stock / payments that we talked about just now, and minus $245 million of expenses. So where do I get that number? Well, I get it from right here, from their 10Q quarterly report. Expenses 229. However, that's increased 15 million from the previous quarter, so I'm guessing there's going to be another 15 million extra expenses on the following quarter. All right, so that's how I'm making. So that's how I got this number. So that's expenses, which is exactly what it's going to be, pretty much. Now, furthermore, we can discount $40 million of fair market value adjustment. Now, what is this fair market value? This is the number that I've been digging in, trying to understand further, okay? So if anybody can shed some light on this, please let me know. But when you look at the 10Q, look at this under income, under other, it says including fair value adjustment on securities. Now, what kind of securities could perhaps MPT own? Well, they own a bunch, actually. They own a big part of PHP, and they have it in 10Q, all the securities that they own from other companies. It's about $1.5 billion worth. And so they just figure, right, I guess, I don't know how they come up with this. Do they have like one person say, okay, this is how much your stocks that you own in your portfolio are worth? Because these are not like publicly traded companies, at least not most of them as far as I know. So how do they figure that they have a $41 million improvement and they count it as revenue? Like, what the heck? It's not even realized, right? So this is completely bogus to me. Unless somebody comes to me and says and rationalizes this number, I can't give it any credence at all. So I'm just going to subtract it, okay? So, because I don't know how they come up with this. I mean, it might be my ignorance, but from what it sounds like, it's exactly what it sounds like to me. So I'm going to just subtract it. And so basically, they're going to have another 200, not another, but cumulatively from previous operations gone wrong, they're going to have a $225 million write-off associated with Steward. So it's going to go in the books next quarter, according to this press release. We're going to end up with basically a bleed of $352 million next quarter. Okay, you know how REITs especially are supposed to have pretty large numbers after it's all said and done. But after expenses, we're gonna have $352 million. That's like a third. That's more than a third of $1 billion in a quarter, guys. That's not counting any possible asset sales that they might have, which will also go as on the revenue, in the books as revenue if they make a sale. So let's say they sell, 300, it'd still be a negative quarter if they made $300 million worth of sales, which would be a successful sales operation. So basically, they're just selling buildings. I was in this situation once. Let me tell you a personal story, right? So this is what it reminds me of, okay? When I was in Bulgaria and we had a hyperinflationary episode in 1997. This will be a short story, okay? 2 minutes, promise, not too long. And we were struggling. Everybody was struggling financially to make ends meet. We had to, use an entire month's salary to buy like 2 loaves of bread. So what are we gonna do for money? Well, we sold stuff. We sold furniture. We sold like all the book collections. We recycled my dad's book collection for like pennies on the dollar. Okay, just paper recycling, just books, tons of books written by good authors, like classics. It was crazy. So, and we're selling furniture. We're selling our beds, our sofa, right? We're selling our cabinets just so we can buy food, survive month to month. It was a pretty dire situation. This is exactly what it's reminding me of. MPT is selling buildings to basically pay interest on debt and to cover a steward's ass. So, moving further, if we annualize this, I'm just a little upset at the situation, all right? So I'm a little heated right now, but if we annualize this, that's $1.4 billion per year of losses. That's crazy. In less than 5 years, this entire operation will be eroded down to zero. Any kind of shareholder equity that they might have, any kind of like book value is going to be destroyed. What book value? Well, the book value that's actually the reason why I'm in this stock to begin with, and this REIT to begin with. Let's take a look at it real quick. It's right here. Currently, PB ratio is 0.26, which is absolutely insane. There are tons of quote-unquote assets on the books, and that's exactly the way out. They need to be sold off. If these assets actually are what the management claims to be, which is, they sold basically at fair value, a little bit above that, as they claim, then indeed they have a lot more assets than the market cap of the company. Obviously assets minus debt than the market cap of the company, but that still needs to be realized. And I think once MPT starts fire selling all their properties, everybody's going to catch wind of that, and the price of the properties are going to go down. If they're selling 1 or 2, then okay, fine. But then everybody's going to know they're selling, so now no one's going to want to take the bid, right? And also, who's got hundreds of millions in their pocket just buying hospitals? Do you have a few $100 million in your pocket ready to buy a hospital? Like, who's going to buy these? And in fact, who's going to buy a hospital whose tenant can't even pay their bills, right? So you just want a building just to have it, just to sit like this, nice and pretty. And in fact, it's not an asset, it's a liability at this point. Having a tenant on your building, destroying it potentially, or having whatever happen in that building that could destroy the value of the building. So you have all these issues, all these problems. I think the buildings are better off sitting empty, for prospective buyers. So the situation's a bit ridiculous to me, At this point, I don't know what to think. Here's the scenarios, right? Here are the scenarios. I think in order to remain bullish, 3A. Here's what I'm looking for. I'm looking for 600 million or more by the end of this quarter, by the quarter report, when they do the earnings call. 600 million or more of assets sold. I don't care at what price, even if it's at a 50% discount. If they raise $600 million from selling hospitals, especially ones that are being tenanted by a steward, I'm gonna be wildly bullish. I'm gonna like lever up even more and go all in on this company, okay? Because it shows me that management is super proactive, is determined. I guess determined's good enough word for now, to make this right, to save the company and to realize the asset potential of the firm and make sure that the valuation matches, right? The market cap matches the actual valuation of the assets of the company. So, and retire a lot of this debt, especially that $1.6 billion revolver that needs to be cleared out. That debt needs to go, because the rest of the debt is all right. It's actually kind of low percentage. I went over it in the previous video if you're interested. So that's what needs to happen. So if 600 million or more, I'm be happy. I'm wildly bullish. If it's like 300 million worth of sold real estate, then I'll be like, okay, fine, I'll wait. And basically, if it's less than that, 3B, I don't have a bearish scenario. I'm going to be basically starting to write my obituary because this is going to be a huge loss. Let me show you how big of a loss this is going to be. All right, let me show you real quick. I'm going to go, I have this position in Robinhood. It's not my only account, but this is where this position is, and this is a public account. So if you watch any of my other videos, you'll know that what's in this account. I just did a yearly review not too long ago. So here it is. This is my position. This is Medical Properties Trust. Currently, the market value of the position is $40,000 or 11,300 shares. But that's not it. That's not it. Before we go further into it, look at this. $15,000 lost today in one day. And then $27,000 lost. 40% of the value lost already due to market movements. And that's not it. Look, I have puts that are sold. All right. 200 puts I've sold at the $2.5 price range. If we reach that price range and I have to make good on those, that's going to be another $50,000 loss right there. And I received $1,000 trying to stem the losses of this, but I just don't see it going under 2.5 with the current status. And then I also have $3 puts here, 10 of them. These are 100 calls, 100 sell calls that I have $100 to collect from. But they're like $7. I should have sold much lower. But anyways, this is the position. So I have a lot of money riding on it. Altogether, probably around over $100,000. And for me, that's a lot of money. Like I know for some people, that's not a lot of money. You know, people will be claiming on forums and Twitter and stuff that, you know, they make like 100 grand a month or something, and that's chump change for them. Well, that's not chump change for me, okay? So that's a lot of money for me, and I'm assuming for most people watching this video. So it's going to be a big loss if that happens. So the turnaround potential is there. I told you what I'm looking for. The only way out that I can see right now is, well, actually two ways out. One is huge asset sales on MPT side. Number two is government intervention. If the government intervenes and saves stewards and pumps them full of liquidity, and basically gives them money that they can survive and pay the rent for now and force them to turn things around somehow, then that will be a bullish scenario as well. And I can see the stock doubling from here at least, if Stewart actually is going to be paying rent on time for the next couple of years. So that's the bullish scenario, and like I said, no bearish scenario. I want to hear what you got to say about this, because I'm extremely concerned. Peace.